All right, we're going to get started here. Welcome to the Directed IRA studios here in sunny Phoenix, Arizona. I'm Jordan Hall, the VP of Marketing here at Directed IRA. Obviously, I am not Nate here. Nate is with us here in Chicago, so I'm just going to get things kicked off from the studio here. But we do have another action-packed webinar lined up for you, continuing our tradition of having great guests and really bringing it in terms of value and information and education. Today we've got Nate Hare. He's the VP of Sales here at Directed IRA. And we'll also have on Eddie Gant. He's a real estate powerhouse who's closed hundreds of deals for us and ready to get rolling. I'm just going to go through a couple of housekeeping items, and after that, we'll be good to go. So first one is Alt Asset Summit. Let me swipe here right there. All right, Alt Asset Summit. Important note for the QR code. Hit the QR code if you're on a desktop. Go to the QR code on your mobile. Make sure you don't browse away from this. We want to make sure you're catching all the information. This is the biggest event we do of the year. And I can't stress enough how you do need to be there. Directed IRA is going to be the event sponsor for the 2025 Alternative Asset Summit. It's one of the most dynamic events in the private market space. I'm super fired up for it. It's October 16th, 17th. It's the perfect time to be in Scottsdale. Right now, whenever you're watching this, just know it is July. Don't want to be here now. October 16th, 17th will be beautiful, perfect weather. It's going to be focused on real estate, private lending, private funds, SDIRA strategies. It's designed both for new and seasoned self-directed investors. Don't miss it. Use the QR code. If you use Nate 100, and Nate, I'm hoping you get credit for this, you'll save $100 off of a ticket. We have different levels of tickets that you can get, from general to VIP to virtual. So be sure you check that out. It's at altassetsummit.com. And again, please be there. It's going to be the biggest event of the year for us, and excited to get that going. The next one, and this is one where Nate usually hits on at the very end, but book a call with an SDIRA expert, and I'll tell you why. Basically, we go through a lot of great information on this. Nate is an expert in this field. Eddie is going to give you awesome information. You're going to have questions. We have a Q&A after this event, after this webinar, and after that Q&A, you're still going to have questions. Either you're going to feel like your question is too specific to ask live, or maybe you're just not the type that wants to ask a question in public. You're shy. That is totally fine. Make sure you book a call with one of our experts. It's a no obligation call. The new account reps will listen to your specific situation, and I can tell you, from the marketing team, we have a mandate where we listen to a new account call every week. And I'm telling you, it is unbelievable how much information they are giving away, how much they know. If you think your situation or where you're at is super specific, no one's ever dealt with this before, it's too nuanced, I promise you, they have dealt with it. They know how to handle it. They are there to give you great advice on what your current situation is. All of your questions, don't be afraid to do it. These people are amazing. And set up a call, same deal. Hit the QR code. Make sure you listen to this whole deal, ask questions, but set up a call when this is done. Set up a call now, and let us know what your questions are, and we're happy to go over it. And that is it. We're going to want to intro Nate. He's with us. Let's bring Nate on now.
How's it going, guys? The weather in Chicago feels like the weather in Houston, and I say that because we got a very special guest, Eddie Gant, who I met in Houston and learned a lot from about real estate investing. So I'm excited to have him on. But I want to share a couple slides first and just go over some housekeeping, because I know we have a lot of new people online who are just kind of learning about self-directed IRA. So I'm going to talk about, what that is. What does directed IRA do for investors who have a IRA or an old 401k, and how you can actually take those assets and move them into things like real estate instead of just investing in stocks, bonds, and mutual funds. So I'm going to go ahead and share my screen here. And if you guys have questions along the way, I've got Ashley Villa who's going to answer questions. Ashley's been working with me for, gosh, a long time. She was the youngest CISP in the country at one point, and she's on answering any questions. So if you guys have questions, type the questions into the Q&A box and try to leave the chat box for networking. And I love that people have been already giving shout outs of where they're from. I saw North Carolina, I saw Colorado. I'm in Chicago right now, so if anybody's in the area, let us know. But let's talk about what Directed IRA does. Directed IRA is a licensed trust company. What the heck does that mean? All that means is we can administrate and hold retirement accounts just like a Fidelity or a Charles Schwab. The difference between a Fidelity and a Charles Schwab and a Directed IRA is really one thing. We don't sell investments to our clients. This is why we call our product a, quote, self-directed IRA. Now, I'm going to talk about what that means here in a second, but one thing that we do not do at Directed IRA is we don't tell you guys what you should or you shouldn't invest in. That's really up to you to decide. As a Directed IRA client that has an IRA with us, you tell us what you want your retirement account to own. And you'd be shocked to learn your retirement account can own almost anything on the planet. But we don't give any tax, legal, or investment advice. This is merely for education purposes only. So one of the things that I learned, and the reason that I'm even in this industry, is in 2012, I was recruited by a company in Houston, Texas, to teach investors how to use retirement accounts to invest in real estate. Now, I had a retirement account at the time, and I had my retirement account parked just like anybody else has their retirement account parked. I had a Northwestern Mutual SEP IRA, and it had a mutual fund in it. And all I knew what to do was just put money in it, and somebody else invested it for me. Meanwhile, I was actually making money in real estate. I was a licensed loan officer right out of college. I had 17 rental properties at one time. I didn't own any real estate in an IRA because I didn't even know that was possible. So when I was recruited back in 2012 to teach people how to use an IRA to buy real estate, the first thing I said is that even legal? How the heck do you do that? How do you own a piece of property in an IRA? I thought those were just for stocks, bonds, and mutual funds. Well, long story short is when I learned about the power a self-directed IRA provides to people that are interested in real estate, professionals in real estate, or just want to diversify their investment portfolio to have some tangible assets like real estate. Well, you should know how a self-directed IRA works. And ever since 2012, I've been on a mission to just teach more and more people about what this is and how it works, because I wish I learned about this 10 years prior to me learning about it. So when we talk about self-direction, though, when we talk about the types of accounts you can self-direct, let's talk about what self-direction means. When you talk about an IRA, first of all, an IRA is an individual retirement account. It's no different at Fidelity than it is at Directed IRA. The tax law is the same when it comes to retirement accounts in general. So when you talk about an IRA or a 401k or a 403b, those accounts by definition are tax exempt trusts. And the 6 tax exempt trusts we have at Directed IRA are listed right here on the screen. Now, you might be confused. Nate, I thought you had self-directed IRAs. I see traditional, I see Roth, I see SEP. Self-directed is just a marketing term. When it comes to these types of plans, by tax law, these types of plans can own stocks, bonds, mutual funds, real estate, commercial real estate, multifamily, cryptocurrency. There's actually not a lot of limitations in the tax code as to what you're allowed to own in a retirement account. There's only 2 things you can't own in a retirement account, and that's just life insurance contracts and collectibles. But if you have an IRA at Fidelity or Charles Schwab, they're not going to let you buy a rental property in the IRA because of the mere fact of they don't make money on that investment. They make money selling investment products. So that's why if you have an IRA at Fidelity or Charles Schwab, and I'm not hating on these guys, I'm just explaining the nature of their business. When you have an IRA with them, they're only going to hold what they sell as an investment product. When you have an IRA with us, The IRA is exactly the same. The only difference is our account agreement with you as our client says we'll hold anything the IRS allows, but you got to tell us what the investment is. We don't have investments to sell. So when you have an account agreement like that, you can go well outside the spectrum of just stocks and bonds, and now you can get into what we call alternative investments. Now we have roughly about 25,000 active investor clients with about $2.5 billion in assets under management. And those assets that we hold in our clients' accounts are anything outside of Wall Street. We're talking single family rentals, promissory notes, secured by property, multifamily, commercial syndications, land, cattle. I mean, the list goes on and on. But the long and short of it is, if you want to invest in something that's considered an alternative investment, if you want to have your IRA hold something that is a little bit more tangible like real estate, you just have to have an IRA set up with a company that will hold the asset. And that's what we do at Directed IRA. So if you take one screenshot of one slide from me, take a screenshot of this slide right here, because these are all the accounts that you can use to own real estate and own alternative assets. And the beautiful part about these accounts is that these accounts are not taxpayers. That's the biggest benefit to owning things like real estate inside of a retirement account, like a traditional IRA or a Roth IRA, a SEP, a solo 401k. We even have non-retirement accounts that can hold real estate and other alternative investments, and those would be your self-directed health savings accounts and your self-directed educational savings accounts. But the biggest difference is when you buy and sell real estate inside these accounts do not get taxed. So you can grow massive amounts of wealth without being taxed. And if you think about real estate, at the long and short of it, real estate's an appreciating asset that also cash flows. Real estate has multiple streams of income. If you can put assets with multiple streams of income inside of an account that's not taxed, think how much faster your money grows. And I have an expert that's going to come on here in a second, not to talk about the IRA stuff, but to talk about how do you actually go out and find deals. And he's been doing this for decades, and he's put tons and tons of real estate deals and non-real estate deals inside of his self-directed plans. But this is where Directed IRA comes into play. We're the IRA custodian. We're the ones that are going to facilitate the purchase and the sale of your assets or your investments, but you got to tell us what the investments are. So this is why we like to bring other educators on, like Eddie Gant, to tell you about how you buy real estate and the types of deals that he has done inside his self-directed plans. And I will tell you, one of the biggest lessons that I've learned from guys like Eddie and a lot of my self-directed IRA investor clients is that you don't need hundreds of thousands of dollars to buy real estate in a retirement account. You do not need a big retirement account at all. And Eddie's going to show you how he's done some deals with very small amounts of money. I've seen people take $50 Roth IRAs and turn them into $200,000 Roth IRAs strictly by their knowledge as a real estate investor or their knowledge of an investor, and doing deals inside of a, say, self-directed Roth IRA that's never taxed. So you don't need lots of money to do this. And Eddie's going to show you, he's going to break down that myth. I have learned a tremendous amount from Eddie. I think we probably met back in 2012, Eddie, when I first started at Quest. I think you were client number 3 or something like that. Wasn't your account number 3 or 4?
Something like that. I've been there a while.
Yeah. And Quest was the former company that I worked with that recruited me. Now I'm with Directed IRA. Eddie's now a client of ours. But Eddie has taught me a lot. Eddie, one of the largest home investor, maybe the largest home investor in the country. He owns a company, Jet Lending, that's one of the biggest and baddest hard money lender in the state of Texas. And he's got the biggest networking event in Houston, Texas. But he's done a ton of deals in his self-directed IRAs. And that's what he's here to talk to us today about. So, Eddie, I thank you for your time. I know you got an event here starting off, so I appreciate you spending a little time with us today.
We're good. We're good. Thank you so much. My lovely assistant, Suzanne's here with me. You want to get us geared up here to share? Hey, there's Suzanne.
Yeah. And just a reminder, guys, if you have questions for me or Eddie, put them in the Q&A box. Ashley will either answer them or relay them to us, and try to keep the chat for comments. You guys can network in the chat, but keep the questions to the Q&A. So,
hello, everybody. Eddie Gant of multiple organizations, mainly these days, Jet Lending and Home Investors, coming to you live from Houston, Texas. I would say sunny Houston, Texas, and it is. But I say that in jest because it feels like it's rained every day for a month or month and a half here. But thank you for those nice words. I don't know if I deserve them, but thank you nonetheless. I'm going to talk to you extremely informally here, and just kind of tell you where the rubber meets the road on some of this stuff. I've been doing this a while. That doesn't mean I'm the smartest guy in the world. It just means I've gone through the growing pains that maybe you guys haven't done yet. So I gave this presentation at Quest, which is where I used to have my self-directed IRAs. That's where I met Nate, as he said. And then, through the years, Quest got bought out by another company, and I wasn't happy with the service. And I have switched everything over to Directed IRA. We're new with them, but I can tell you this customer service and getting people on the phone is, you just can't put a value on that. And I've been extremely happy. Before I actually joined Directed IRA, I had one of my really good friends. Let's see, we'll call her Shauna. We'll call her Shauna because that's her real name. And but Shauna had already bragged about Directed IRA and Nate's crew about the customer service. So we followed suit, and we've been very happy. I've done a gazillion deals in my both. I have two IRAs. I have both the traditional and the Roth. And you're going to see some things today here in the next 30, 40 minutes that you go, oh, okay, Eddie, well, that's the obvious. But I'm also going to show you a lot of things that you probably haven't heard of in your IRA, and it's really cool. So, been doing it a while. I left. Whoop, my advance button didn't work, Suzanne. Whoop, there it goes. So, I'll touch on all this stuff here in just a minute, but I came up with this silly little thing about watch your corn grow. I'm a country boy from Mississippi. You can probably tell the southern accent, and so it's with me, and I can't get rid of it for this presentation. Sorry. So I was trying to come up with an idea that'd make it a little bit, make you smile a little bit. And I come up with, well, I'm from Mississippi. Let's talk about something that I really relate to. Let's grow your corn. Grow it big and tall. So your corn for this presentation is your IRA. So you can't just show up and grow corn. You got to have good soil. You got to have the seed. You got to have the water. You got to have the sunshine. You got to have the fertilizer. It's kind of sort of the same with your IRA. You got to have someone. You got to have an IRA custodian, Directed IRA today. You got to have a mentor in real estate. You gotta have a little bit of teaching. You can't just show up and reap the rewards. It's a lot of planning goes in. So anyway, I left corporate America in June of 1999, and I jumped out. I know I don't look very smart, and I'm not, but I did structural engineering for 17 years and building power plants in Texas, and then later petrochem on the ship channel here in Houston. So I like to say, and it's not much of an exaggeration, I've been in every refinery and chemical plant from Corpus Christi, Texas to Mobile, Alabama. Now, I haven't been in all of them, but I'm pretty darn close. But I got off into flipping houses in 99, and that was 1,875 houses, plus or minus a few since then. So we've been in a few houses. Remax agent for 20 plus years, Remax Hall of Fame. In 2004 is where I really kind of kicked it up another notch when I started jet lending, a hard money lending company, and we've had a good run. We've closed over 5,000 loans, $1 billion in originations. But I spend a lot of time. I spend all day, pretty much every day, in either flipping houses or loaning money to those that are. So structural engineering, start off in nuclear. I'll go through this so it doesn't bore you. But if you're a really savvy or get savvy, you may not be savvy today, but you can get there. believe me, in June of 99, I didn't know too much about what I'm talking about now, but we kind of got there over time. So you can grow that little bitty piece of corn into something you can be really proud of. I've been published in many articles out there over the years, been on TV, blah, blah, blah. So, can you really do all this stuff? You can. Here's my bread and butter, flipping house. I still do it today. I flipped my first house in June of 99. I started flipping in my IRA at the help of Quest IRA, which is now I'm at Directed IRA. You know, it is just a fantastic way to do it. Okay. So instead of using my normal funds of my cash or my bank lines or bank loans or wherever you're getting your money from, use your funds from your IRA, invest into that fixer upper flip house. Totally legal. And Nate brought up the legality. I actually had my old buddy at Payne Weber, now at Merrill Lynch, tell me back in 99 I couldn't do this. It was illegal. You can't do that. It's illegal. Well, it's not, or we wouldn't be doing it. But basically, to explain that, I find a fixer upper. Let's say I'm buying it for, let's just use some round numbers. I'm buying it for 200,000. I use $200,000 from my IRA account. The IRA account actually owns the asset, actually owns the house. If I put in 50,000 in rehab, the 50,000 comes from the IRA. So now I've got 200 plus 50. I got 250 plus, you got other things. You got utilities, you got insurance, you got some other things there, closing costs. And then the IRA then sells the property. You can use a real estate agent, use a RE/MAX agent, do whatever you want to do. It's regular real estate. It's just the asset, the house, is owned by your IRA account. Sell it for, say, in this example, 325. So you're going to have some closing costs. You're probably going to have some commissions. Let's say your funds at closing are 300. So you got 200 purchase price, 50,000 rehabs. You're at your total funds proceeds back to you at the closing table when you sell it 300. The entire 300 goes back into your IRA. So how much did your IRA make? And I don't even have this on the screen. I'm running it in my head as I'm talking to you. You boosted or made about $50,000 into your IRA account, whether it's your Roth or your traditional. And in the saying, which I hate, repeat, rinse, repeat, I do this just constantly with my IRA. I heard Nate say you don't need a lot of money. My daughter has a very small IRA. So what I do a lot of times is I partner with her. My IRA partners with her IRA. And let's go back to that same example. I paid $200,000 for. Well, if she only had, say, 20,000 in her IRA, I could use 10,000 of her IRA money to purchase. So instead of me being in it for 200, I'm into it for 190. She's into it for 10. So therefore, she owns 5% of the asset. Okay, simple math. And then when we sell it, 5% of those proceeds go back into her account. So you can partner with others. There's two lessons there. You don't need a lot of money to do this you don't need a lot of money in your IRA to do it, but you can also partner with others. I have done a lot of flips where, I want a little of the cash back in my pocket. Well, I can't take cash back if my IRA is buying, selling, rehabbing, and all the proceeds got to go back into your IRA. So what you can do is partner with one of your personally owned entities. So the IRA can own 50% of the house. You can use 50% funds from your IRA. You can use 50% of your funds from personal, and it's titled in. Your IRA owns 50%. Your entity that you own personally owns 50%. And it's simple math from there. 50% of the proceeds at the sale would go back into your IRA. 50% of your sales would come to you personally. So we do that. It's a little bit extra paper push, to get that done, but we actually do that often. So this is the bread and butter. We buy, we fix up, we sell, meaning we fix and flip, okay, with our IRA money, okay? I like to call this the rocket ship. It truly is. I don't think you could ever match the returns I get from these type of investments, flipping houses. And there's other things coming here. This is the boring bread and butter one. I don't think you could ever get those returns doing stock in Coca-Cola, Exxon, and the others. I just don't think you can ever get there. Okay, that's my bread and butter. Buy, fix, and sell. Quick, this is an actual house on Bayback Street in Galveston. Paid $76,000 for a small house. I think this was actually a condo. It was a condo. I looked at Suzanne to my left, but I remember the property. It was a little condo. I put 30 in it, sold it for 130. My IRA netted 24,000 in about. It wasn't 60 days, y'all. It really wasn't. And y'all can tell I'm from Texas saying y'all, Mississippi and Texas. But anyway, and we got 2 going in process today, fix and flips. This is one I don't do as much, but it's still there for you. You can buy rental properties. You can buy it with your IRA. You can hold it. All of the rents income, the rental income goes back into your IRA account, and you can sell it down the road. And I don't care what anybody tells you about rental property. You need to remember this. The money in rental property, this is not an IRA discussion. This is just a rental property discussion. Where you make your money in rental property is appreciation. We got a bunch of them. Now the IRA only owns a few because I like to turn the money quick in the IRA because I like to see it build. But you can do it this way, and we do it this way. All of the rents go back into your IRA, so you're probably popping it for an 8 to 15%, cash on cash return out of your IRA year to year. But if you hold these long term in your IRA, the benefits are huge. The benefits are huge whether they're in your IRA or not. You think about the different income streams for typical rental property investment. There's cash flow that we're talking about here. There are tax advantages for depreciation. There are paying the debt down on the mortgage if you're carrying a mortgage and it's not in your IRA in that example. And the appreciation. I don't care what anybody tells you, the money is in the appreciation, I assure you. And with a cheap 50-cent calculator and a legal pad, I can prove it to you in about 45 seconds. That's why we like rental property here. Okay. Little Baytown rental. I still own it today. I only pay $22,000, and there's 2 lessons here. This is a mobile home. It's a manufactured home. I honestly paid $22,000 for it a while back. It's been rented ever since. It's almost never vacant, and I'll tell you why in a minute. I did not know this when I bought it. We learned it later. We currently, after we pay our taxes and insurance, we net $900 a month on this mobile home. It's a single wide 2-bedroom, 1 bath. It is very close to a racetrack in Baytown, Texas, on the east side of Houston. 900 times 12, I believe that's 10,800. That's how much the IRA sits there and makes every year off of this little bitty 2-1 manufactured home asset. It's golden. So, little story. It came vacant early on, and I ran a small ad, had signs out, running all over town. I had everybody come at the same time to view the property. We had like 12, 14 people there, maybe 15. I couldn't believe why are all these people coming to this trashy little 2-bedroom, 1 bath, little single wide mobile home? Why? So I started asking them. School district, Barbers Hill School out near Baytown, and I had no idea of the popularity of Barbers Hill schools. So I learned something about holding rental property. I like to hold them where the high schools are really, really prominent. The high schools are really, really, really famous. They're highly rated. You do that, and your assets will appreciate.
Eddie, can I make a comment on this?
Of course you can.
So $10,000 in rent on a $22,000 purchase. What's the yield on that?
You can't calculate it. It's too large. I contacted Texas Instruments, years ago, and they said they were years away from having the technology to calculate that yield.
Can't even calculate it. I love it.
Can't calculate it. It's too large. Okay. That's kind of a funny little thing there. All right. Now, this one's where we start to get a little complicated. We can buy them and owner finance them. And I actually love this in my IRA. Love it, love it, love it. And I like to do the low end. Okay, you're getting ready to see a case study here really quick about that. But this is a fantastic revenue generator, a fantastic, IRA growth mechanism. Because when you buy them and owner, you buy them with your IRA, you need any rehab, which would be minimum most of the time on some of these, because you don't need to rehab them to sell them. Owner finance is the reason. And then we owner finance them. We usually get 20% down, sometimes 25% down. That down payment goes back into your IRA. So remember, we're real estate investors. We're going to buy low, sell high, and you sell even higher when you're going to owner finance them. You can get in Texas 10 to 15% premium on a price on an owner finance, and you usually don't have to pay a real estate commission because you sell them from the yard signs. But if you do pay a commission, okay, so be it. Pay a commission, but it's a fantastic way to build your IRA. All right, this is a true story. Remember, I said I like low end. I bought a 3-house package. I paid $9,000 each. Same guy. Now, these weren't pretty houses. I would classify them as livable, barely, or barely livable, or almost livable. So we sold them all to owner occupants, and they put money down, and then they fixed them up. And I held these things. I say held them. I held these notes for a long, long time before they ever paid off. Eventually they sold or refinanced, but I owned one of them 3 times because they would stay 5 or 6 years, abandon the property, and I would foreclose and resell it again, owner finance. I can't see the number down there, but I think my IRA profited over $250,000 over about a 20-year period on these 3 houses. And I mean, just an unbelievable investment. Had I known this years ago, I would have bought a lot more of them. But when I give other presentations, I talk about there's money in junk. Every time I say that word, there's money in junk, I think about this. So I love to buy junk in my IRA and owner finance it. Now, that's not meant to be, a negative thing. There's a lot of low income people out there that can't go buy a house and pay a whole lot for it sometimes. They just don't have the economical way to do it. And they'll buy these houses from you. They'll improve the asset. They'll actually improve it, and they'll be there a long time. And it's a good deal for them. So don't think this is a negative. You're actually helping somebody, because not everybody can afford a $1,200, $1,500, $2,000 payment. You got a lot of people out there only afford $500, $600, $400 on house number 3 here. So you're not doing anything wrong. You're helping people, and at the same time, you're helping yourself by growing your IRA.
Let me add something to that too, Eddie. From the IRA's perspective too, or just a retirement account, perspective is, that's powerful. If you guys missed that, he had a property that he bought in his IRA, owner financed it to a tenant buyer. They abandoned the property. He foreclosed. Happened again, he foreclosed, but the whole time his IRA was secured by the underlying asset, which was real estate. So even when things go wrong on an investment, but it's tied to real estate, sometimes you make more money in the long run, which to me, that was always the thing that was the aha moment for me. It's, you can invest in a stock and that company goes belly up and you have nothing. You have no recourse. You lose every penny that you invested into that company. But even when things go wrong, if you structure your deals the right way and your IRA is still, tied to the asset, whether it's owner financed or it's just a straight promissory note to an investor that buys a property, if you structure it the right way, you've got collateral, which is the house, which is powerful if you're talking about wealth preservation to be tied to some tangible assets like real estate.
Yeah, that's right. And I know there's somebody out there on this call that's either a licensed mortgage loan officer, been doing this a while, and they're sitting there going, hey, how about Dodd-Frank? How about Dodd-Frank? Well, you got to stay Dodd-Frank compliant. You're allowed to do 5 per rolling 12 months for free. And what I mean for free is you don't have to be licensed. Yes, even though you're selling your own property, when you step into transaction number 6 of owner finance, even though you're buying in your IRA, you got to stay compliant with Dodd-Frank, which means number 6 in a rolling 12 months, you got to have a licensed mortgage originator do the paperwork for you. That's all that means. You got to have a professional with a license to do the paperwork. And then when you get past year 12 in a rolling 12, then you get 5 more for free. That's the way the law is written. Okay, so just remember that. Don't think I'm sitting here trying to tell you can go do 30 of these things in a rolling 12 months with no compliance issues. You got to, on your 6-1 in a rolling 12, you must comply with the Dodd-Frank, even though you own the asset and you're the person that's financing it. You got a question, Nate? Looks like you do.
No, I was going to say, Ashley, do we have any questions or are we good to roll?
One sec, let me take a look.
Yeah, if you guys have questions, go ahead and type them into the Q&A box. We'll either answer them on the fly or we'll answer them at the end. But we want to make sure we get to everybody's questions.
So there's a lot, looks like, around disqualified person. So here's one. It has always been my understanding that you can invest in yourself. Can you go over that? Another one is, isn't there a rule that you can't use your IRA for your own deals? And so a couple that are around that, if we want to go over that.
So let me touch on that. So when it comes to self-dealing and prohibited transactions, that has to do with if your IRA is buying property from you, right? There's certain people your IRA cannot transact with. You can't transact with the IRA owner. Your IRA can't transact with the IRA owner's spouse, their kids, their parents. Now, in all of these deals, Eddie did not already own them. His family did not already own them. Eddie just went out and found them, negotiated with the seller, who was not him and not his family, negotiated with the seller, and his IRA was the original buyer. So he's not buying his own deals. He's finding deals for his IRA, which is his job as the fiduciary to his IRA. He's supposed to find investments for his IRA. But where you get into conflict is where, let's say Eddie owns a property in his LLC. He can't sell that property to his IRA. That's where you get into the prohibited transaction problem.
Here's something. Remember, I started simple, fix and flip. Then we went to rental. Then we went to owner finance. I'm going to continue down the path of things you may not think of. And this is a pretty good one here. All right. This is one of these times you just stumble on something by accident. All right. So, as having six, well, first of all, I rolled my 401k over from you saw a flyer earlier. I worked for a company called Hilti as a structural engineer. And that was my 401k that I later rolled over to Quest, which is now at Directed IRA. Okay. So I'm having some success flipping houses, having some success at some other things. So I'm building this IRA or building these IRAs, plural, traditional and raw. So now I got a little extra money in there and I come across an opportunity. The first one was Icon Bank. So Icon Bank was a startup bank, and I was lucky enough to know some people over there and got invited to invest in the startup capital. So I thought, well, I really don't want to burn my cash, that pays my daily bills and everything. Now I got the little extra money in my IRA. Let's try that. So I did. So it worked, and I ended up with 3 banks: Texas Citizens Bank, Community Bank, and they all 3 sold. So that's your payday. I don't know that we ever really even hardly got $1 through the years with dividends. But when the bank sells, you make money, or your IRA makes money. But that's okay. But let me tell you, the big deal there is the relationship that I established at those three banks. I still bank at all three of those banks, but they're not called Icon anymore. They're called Cadence. Texas Citizens is not called Texas Citizens anymore. It's called B1 Bank. And Community Bank's not called Community Bank anymore. It's called Stellar. The relationship that I forged by buying stock in the startup carries me today in other companies. Jet Lending, for example. I bank with them today. It all started with me buying stock in their bank. They all remember that. So that's pretty cool. Not only did I make money from IRA, but I forged a pathway of lifetime of relationship with some executives at those banks. And I'm going to tell you, it still works today for that reason. All right, mobile homes. I talked about the rental I bought out in Baytown, but you know, I know a lot of you are not in Houston, but I'm going to tell you this in general. This is not an IRA statement. This is investing in mobile home statement. If you buy mobile homes built after the year 2000 and they're double wides and they've never been moved, excuse me, Susan, I may have to get another water. I'm just about done with this one. Built after 2000, double wides, and never been moved. And never been moved is a big deal. Y'all in Texas, those things sell just like regular houses. I mean, we buy the crap out of them. I mean, we buy a lot of them. And we don't ever get burned on those deals just because they're mobile homes. Now, the old junkers, and that 2-1 in Baytown is a junker, but I bought it for almost nothing. Still own it today as a rental in that great school district. Be a little careful. Be a little careful. Has nothing to do with IRAs, just investment general. Be a little careful buying the old single wides, especially if they've been moved around a little bit. You can have some other issues there, and we know that. So we're a little bit more careful with those that's been moved a couple of times. Okay. RV parks, mobile home parks, cash cows. Cash cows. All right. Don't be afraid of those things. We have invested with our IRA monies in mobile home and RV parks. I have sold them all. I do not have one. I don't have a single one today in my IRA, but I used to, and we made money on them. Okay. Here's the one I like probably as much as anything. Buying notes. It's unbelievable what you can do buying notes. You buy notes just like you buy houses. You buy them at a discount. You make sure that your lien's perfected. It's not hard. Okay. You make sure that the people in the house are the ones paying you, and they acknowledge that, yeah, they signed this note. And how do you do that? You simply go knock on the door, talk to them, make a friend. Okay. They probably didn't like their previous person that financed them. You can improve the relationship. But these deals, you can't really buy enough of these. Again, you buy them just like you're buying houses. You buy them at a discount. I do love them. I love the mom and pop stuff. Meaning, example, old Joe Brown had a house on the east side of Houston, and he sold this old house for $100,000, and he got 30,000 down. So he financed 70,000 at 10% interest, and so he financed 70, and the payoff is now 60. He got another 20 years. I'm just going to quickly in my head offering 35, 40,000 cash for it. You'll be surprised how many of them you get. Calculate the yield. Pretty high. I love buying notes. Can't buy enough of them, to be honest with you. Okay. I had a guy.
Eddie, can I ask a question real quick?
Yeah.
I like to ask this question. This is good for people that are just starting out or people that are investing in real estate, because you don't buy every deal in your IRA. You buy deals outside of your IRA. What's the method to your madness when you go and you look at a deal, whether it's going to go in your name personally or in your IRA? Is it just a mere fact of I've got cash in my IRA, I need to get it deployed, or is there more of a system to it when you go out and look at a deal?
I'm gonna say that's the number one you touched on, and that is there's money on the sideline in my IRA. That's far and away number one. We
Yep.
we made an offer on a house out west of Houston, Lake Buchanan area this weekend. We think we're going to get it. I looked at my IRA. I told Suzanne, "Hey, we got enough money in that one. We'll buy it with the IRA."
So you don't pass on deals. It's if you got cash sitting on the sidelines making a big goose egg. So you want to make sure that that's deployed, and then if that's deployed, then you go just buy the property in your name.
That is correct, 100%. That's
Simple. Okay.
90% of the decision. Okay. Now we'd like the IRA money to be deployed. We'd like the IRA money to be making money, because I'm not going to pay taxes on it right now. If it's in my Roth, I'm not ever paying taxes on it anymore. In traditional, we pay when we withdraw it. I believe I got the laws right. You correct me if I say something wrong there, Nate. But I don't pay interest on my credit lines. I don't pay interest to the bank. That great bank, Icon Bank, which is now Cadence, I don't pay them interest when I'm using my IRA money. It's pretty simple. Did that answer the question?
Yeah, and I would say for people starting out, obviously, if you're starting out with a small IRA, and you're relying on deals to put food on the table, do those deals first. But realize if you just keep continuing doing deals in your personal name, Uncle Sam's your silent partner forever. So, make enough money on your deals to cover your needs, cover the mortgage payment, cover food, cover gifts for the kids, and then do some deals in your IRA, however it works out for you. But you should be doing most successful real estate investors I know, they do deals in both lanes. They do deals outside of their IRA to put food on the table, and they do deals inside of their IRA so that those grow tax free.
Yeah, that's right. We're 100%. This little note here, guy walked into our office and had that note for $40,000. I went and looked at the asset. It was a junker. I didn't like the collateral that much, or I would have paid him a lot more. But I offered him $13,000, and he turned me down in the office. And he kept quizzing me how long would it take him to get that money if he decided to do it. And I told him, I don't know, you follow me down to Prosperity Bank and I'll get you the cash. You got to sign these docs. And we already have the docs set ready. And he left. He said no, he left. I looked at Suzanne at that time. I think it was you, wasn't it? I said, he's coming back. He'll be back. And it wasn't 2 or 3 hours. He come back and he said, let's go down to the bank and get the money. And he signed the docs to transfer the note to me. We went down to Prosperity Bank, paid him $13,000. Look at the numbers. $725. That was all principal and interest. I had 8 years. That's 96 payment. So about, call it $60,000 that we ended up on income on a $13,000 deal. Now here's the funny part. The lady paid it off. She stayed there the whole 8 years and paid it off and come to me for a cash out refi. And I probably could have done it, but I got a little scared because a cash out refi on an owner occupant is a loan you got to be licensed to do. It's a home equity loan. And I just got scared. Not say scared. I just didn't feel comfortable doing it. So I didn't do it. Some other people told me later, since I was the original lender, I could have, but I did not do the cash out refi. But I had the opportunity to do it. But anyway, just a good example of cheap notes, very profitable. Timber. You don't think about this one every day. I bought some land in Mississippi. Got a lot of timber on it. We actually had our third thinning on that timber early summer, late spring of this year. And I'll just tell you, what was it? $110,000 that I put back in my IRA off selling a little piece of timber off some property over in Mississippi that I own. And I like that. And that land has appreciated greatly over the years. So that's one you don't think of every day. So everybody thinks this is a rose garden, right? Can you make a bad decision? Uh-huh. All right, I'm going to skip. Since I brought it, I'll go back to that commercial property. Buy stock in a new Austin, Texas whiskey company. I had to change this slide today. because this recently went bad on me. That's money gone forever. I don't know the exact amount. I don't know. I'm going to guess $150,000.
At least.
Gone forever. Gone, 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 gone. You know, I trusted these guys. They're good guys. They're not thieves, but they were going to start a startup Austin whiskey company and vodka company, and they got to fighting amongst themselves, and that company spiraled downward out of control. So the lesson here is, you know, stick to what you know. I guess I didn't know the whiskey business, and I still don't. And I never was involved in the daily operation. I had an extra, batch of money over my IRA and threw it at them. Thought we would hit a home run if this deal hits. Well, it didn't. Well, it hit, and it hit rock bottom at what it hit. If you really want to know the truth, yeah, it hit. It hit rock bottom. So anyway, be careful. I don't think I'll do that again. I'll stick to my flip houses, my mobile homes, my land, my timber, my notes. I think I'll stick to that. I skipped over because I thought that was the next slide. But you buy commercial properties. This is not one I do a lot. Very, very little in that. I like the flips. I like the mobile homes. I like the dirt. I like raw dirt. Raw dirt's good. Okay. You can loan it out. You can loan it out to whoever you want to loan it out to. There's a set of paperwork you got to be proficient at. You need a real estate attorney to draw your docs for you. But I know a ton of real estate investors that loan their money out through the IRA, and the interest payments go back into the IRA, and you're a private lender. It is not difficult, and it is a fantastic business to be in. I've been in it basically now since 2004, loaning money. I've been flipping houses since 99. So I'm 26 years in flipping houses. I'm, 20, almost 22 years in loaning it out. A lot of IRA people can loan it direct to the flipper. If they don't want to do that, you can loan it to your local reputable hard money lender. Just be careful who you're doing business with. Check them out. Make sure they got their act together. And most do. But if you don't want to go to the hassle that you got to go through, if the owner of the property quits paying or goes south, then if you don't want to go to that trouble, don't loan it to them. Loan it to the bigger hard money lender. You make a little less spread, but all of the reputable lenders like Jet Lending, if our client quits paying us, we keep on paying our IRA money supplier, capital supplier. I just made this up. We've got over $20 million at Jet Lending from various folks that have unused or the capital not being used in their IRA account, loaning it to Jet Lending. Some of them multi-million dollars loaning it to Jet Lending. And we're happy to talk to you. You can contact me. But that's okay if you don't want to do that. That's okay. You buy those flips, you buy those mobile homes, you buy that raw land. Just don't buy whiskey stock today at my recommendation, please. A little bit about Jet Lending. We've been around a while. I'm not going to take you all through this. You guys can see this on your own time. But we've been 22 years loaning money. We've been flipping houses for 26. I hope y'all enjoyed that. I hope it gave you some ideas of things you can do. It's really reasonably safe if you get a little bit of education first on determining the asset value. That's probably the biggest thing you got to do, determine asset value. Second thing is whatever documents you're using. And it's not that hard. It's really not. If I can do it, country boy from Mississippi, you can do it, I assure you. Nate, I hope I did you proud.
No, you did great. And, again, these webinars are not to make you guys experts in 60 minutes. It's to just get you thinking about what types of investments you can do inside of an IRA. And Eddie just gave you about a dozen of them. And it doesn't stop there. So this was great. I know you got to run, Eddie. I want to see if there's any questions. And we're not going to be able.
I'm
Yeah.
in the room where the event starts, but we're 32 minutes away. We're good.
Okay. Okay. Good. We're not going to be able to get to all of these because there's 45 questions. So if I don't get to them, what I will say, guys, Tristan, if you can pull up the book a call link for people. If I don't get to your question, just book a call with one of our IRA specialists. They'll be able to answer most of these questions, but I do want to hit on some. I'll take this first one because there's a couple questions on lending specifically, and you can add to this, Eddie, too. But it's about interest rates. Like what do you charge? We got a question. While I understand every deal is different, can you give a sense of what the standard hard money rate might be? Like 12%, 6 months, I'll give my stance and then you're the expert, Eddie, but
Sure.
I'll say when you talk about lending money from your IRA, you're really talking about private money. There's a little bit of a difference between private money and hard money. Hard money's through an institution like, maybe like a jet lending. Private money is money in your bank account or money in your IRA. If you're going to use your IRA as a lender, it's really up to you to decide what interest rate's comfortable for you. I've seen people loan money out at 5%. I've seen people loan money out at 18%. But that's a negotiation between you and your borrower. I'll just say from what the notes that I see in clients' IRAs, private money rates usually fall somewhere in between conventional rates and hard money, right? Private money is usually around 8 to 12%, I would say in most cases. Personally, I like to do short-term loans in my Roth IRA because none of the interest is going to be taxed. And when I take distributions at 59, the distributions won't be taxed. Now, the reason I like to do short-term notes is because I like to compound my interest too. I don't like to do 10, 20, 30-year notes to a borrower because it doesn't allow me to compound my interest. Plus, the people that I'm loaning my Roth dollars to, they don't need it for 30 years. They need it for a year. They need it to buy a property and flip it. So I'm usually structuring my deals 6 to 18 months, 10 to 12%, maybe 14%. And then that borrower, that real estate investor, pays me back through the sale of the property, or they refinance to conventional financing and get that lower rate. I get my principal interest back and then I redeploy it on their next deal or another deal. So I would say if you're going to generalize where private money is, I would say between 8 and 12%. But again, it's up to you, the IRA client, to decide what interest rate you're going to deploy it at and what your borrower is going to be comfortable paying. What do you want to say to that, Eddie?
Yeah, I'm going to give the answer to two different questions. What does jet lending or a company like jet lending pay our private sector for capital? And then also, what does a jet lending like company loan it out at? Because we make our money simply on the spread plus fees. That's how we make our money. That's how we pay our overhead. But we pay at jet lending, and it depends on a lot of things. I won't go into all that. 8 to 10% is what we pay. We charge the money going out the other door to our fix and flip guys or our landlords 10 to 13. Yeah. And I think you'll find the range holds through broadly out there.
Yeah. So if you guys caught that, and this kind of answers the next question that I was going to take, which was, how do you find these people that need money? Well, there's one of two ways you can do it. One, you get out there and network, right? Eddie's got his super investor meetup. It's the largest investor meetup in all of Texas. They're starting it back up. I've been to that event. There's 300 people. Most of them are investors. If you want to look for people that need money, go to a networking event like that. Or if you don't have the time or the network to go find people on your own, you can leverage companies like Jet Lending. Like he said, you can invest into a note fund or with a company like Jet Lending that's doing all the due diligence. They're doing the underwriting. They've got borrowers coming to them, and you can just lend money to Jet Lending, and then they lend it out, on your behalf. So, there's a couple different ways you do it, but you got to get out there and network, I would say, if you want to do it on your own or know somebody like Jet Lending.
Yeah, we don't have trouble finding people to loan it to. They line up at the door, honestly. We'll have over 300 here tonight in this room. It's a networking event. We have a little technical presentation, but it's networking. And then we attend a lot of other events. We're all over social media. We've been around for a long time. Our reputation is stellar. We actually won back-to-back years, and we didn't pay $1 for this. We won back-to-back years now, 24 and 25, Forbes #1 hard money lender in the U.S. for customer service. and we did not pay a dollar for that. We don't advertise on Forbes, but we were recognized 2 years in a row.
Yeah.
Our reputation's stellar. Everybody knows who we are in Texas, so it's finding business is not that difficult for you. If you want to loan it out direct and not go through a jet lending, the best thing I can tell you is start attending real estate investor events. And I don't know where you are, but I can guarantee you in your city, there's multiple events per month. Just start attending them and start telling people what you do, and then you're going to ring.
Yep. Now there's a couple questions, and I'm kind of combine a bunch of questions into one, but it really comes down to when your IRA owns a property, who pays the expenses and who manages it. So Eddie kind of mentioned earlier, which is correct. If your IRA is the owner, the IRA should pay the expenses, and expenses could be property taxes. It could be paying contractor Bob. It could be paying for utilities. There's a couple different ways you can do that. One is if we're the IRA custodian, directed IRA, we're going to hold the deed to the property, so that's going to show that your IRA owns the property. And then if you need to pay an expense, you just turn in the invoice to us with a payment authorization, and then we pay it directly to whoever we need to pay it to. Now, that's one way you can do it. It can get a little onerous that way if you've got a property that has a lot of recurring expenses, or you're buying a property that's got a heavy rehab, right? If you're coming to us for every deployment of funds to every contractor and that could be a little onerous. So we do have a solution to that. We have a law firm, KKOS Lawyers. They've done this for about 30% of our clients, where instead of your IRA owning the property or the house directly, your IRA first can just own an LLC. We can actually set up a single member LLC or a multi-member LLC, and the owners of that LLC can be your IRAs. Eddie's actually got one of these set up now. Now, what this allows you to do is you as the IRA fiduciary, you get to act as the manager of the LLC. Okay, you can't pay yourself a salary. You don't get any income from this LLC. This is merely a entity that you can have set up that's owned by your IRAs. And then the LLC is the one that goes out and buys the property. The LLC is the buyer on the contract. What makes it easy is the LLC is going to have a business checking account. You can use that business checking account to pay the expenses. That way you don't have to come to us for every expense. Now, when it comes to management, one of the things you want to be very careful with, and Eddie will probably tell you how he does it. When it comes to management, you got to be careful on how active you are with your IRA owned property. And active meaning if you're swinging the hammer, if you're trying to be the contractor on a property your IRA owns, the IRS might come hunt you down. They don't want you extending those types of services to an asset owned in your retirement account. But if you're just using your brain as the fiduciary, you can do that. And by brain, I mean your job is to find property for your IRA. You can negotiate the terms on what that property is going to be bought for, right? You can find the contractors that are going to be working on that property and have your IRA pay the contractors. But you can't be the contractor. You can't get paid by your IRA to do that type of work. You usually have to find what's called a non-disqualified person. You can find a property manager, whatever it is, but it has to be somebody that's not you actively managing the property, or those other disqualified people I mentioned, spouse, parents, kids. Eddie, how do you work around that? How do you stay at arm's length when it comes to your IRA owned property?
Well, for the work you described, it's pretty easy because a hammer and a paintbrush will not fit my hand. It just falls out. I don't know what.
Yeah.
I run the operation. We have lots of subcontractors. That's never been an issue here for us. For the rentals, we actually have a property management company that collects everything. So that's not an issue. We use what little brain we have. That's what.
Yeah, you just have to have someone in between you and the IRA. You got to have a little arm's length. Same thing with note investors. If you're investing in a note, and let's say that you've got a lot of notes and you've got a lot of people that are paying interest, I mean, you can have a servicing company, track down those payments and collect all those payments. The IRA LLC also helps with that too for you active lenders, but you just got to be at arm's length. And if you've got questions specifically to an investment you're looking at and how to stay out of trouble, again, that's where you use the book a call link with us, schedule a call with my team, and they'll kind of walk you through it. So that's all the questions I'm going to be able to answer because we're going over a little time and I want to be respectful to Eddie's time. Again, if I did not address your question, I apologize. We had a ton of people on. I appreciate you guys. You can either shoot me an email or reach out to my team with that book a call link. They can answer all these questions that I see here. Eddie, any final last words? Any golden nuggets?
No, well, just get educated. That's what you got to do. This is not hard. It's really not. It may be intimidating you early on. You go like, oh my gosh, all this to learn. It's really not that difficult. Just it's repetitive. Listen, absorb, and you'll get there. For any Houston people, we are at I-10 in Kirkwood I don't know if you can see behind me, the Total Wealth Academy campus out here at I-10 in Kirkwood. Our networking starts at 5:30, and we'll go for a few hours and come on out and join us. Nate, we appreciate you. I'm so happy that I switched over from the Quest Inspire group over to you guys. Couldn't be happier. And all of my friends that we've referred to you are very, very happy with everything that they're getting at your new home at Directed IRA. And we appreciate y'all. And anybody out there, just email me, call me. It's cool.
Yeah, I appreciate it. I appreciate you, Eddie, for sharing this. Appreciate everybody for joining us. Make sure that you guys go register for our next. Hi, Suzanne.
Hi,
and thanks,
Dave.
Suzanne, for helping us out with all the tech stuff. Appreciate you too. We'll see you guys on the next Directed IRA webinar. Make sure you reach out to us if you have questions. And thanks again, Suzanne and Eddie. We'll talk to you guys soon.
Appreciate you. Thank you.
Have a good evening.